Hey everyone, it's the Geeks from the Geeks of Finance. We're looking at the market today after 2 days of sell-off and volatility rising sharply over the last couple of days. The SPY tagging this 565 level a couple of days ago, which as you can see is right at the bottom of our dealer cluster. This 565 level was a major gamma exposure concentration. That has since reduced since price came up here. Now price selling off. Gamma exposure at the 550 strike has been growing since the market opened this morning. These blue bars here represent volume by strike. This is today's volume in the options market. And one of the things we noticed is that not only did the total gamma exposure flip negative this morning on both SPY and SPX, but we've also noticed a huge spike in an implied volatility. So we are currently, according to our GEX weighted volatility gauge, we are higher than 62.5% of readings in the past year in terms of implied volatility. So implied volatility spiking, the VIX is up 10% today. A lot of stuff happening in the market. So in this video, we want to look at a number of trade ideas we have to take advantage of this potential structural shift in gamma exposure. And so we're going to go through that with you guys here now.
All right, thanks, Anthony. Let's take a look at the VIX briefly. We had noted the divergences that we were seeing with the VIX and the VVIX, which is the index that anticipates the future volatility of the VIX. So we knew even if the market were to go up, we were probably going to see volatility rising with that at the best case scenario for the market. And sure enough, we got these two spikes. We always take anything with the VIX with a grain of salt because there's so many competing forces in terms of hedging, but we do have 17 as the largest positive strike out of August 21.
Yeah, and check out this channel we've been looking at here on the SPY. This has been developing for nearly a year now, but we started watching this closely in April with multiple tags that you can see here on this channel during the month of April and into May. But what's interesting is that the bottom part of this channel, this is right between this 540 and 550 level. And so if we come back here to our gamma exposure dashboard, we see these are actually the largest negative gamma exposure levels between 550 and 540. And I'm even seeing the 530 grow out here. And our thoughts are as long as gamma exposure remains in negative territory, these are likely the targets as the market continues moving lower in that environment. What's interesting about this is this 535 level in any scenario would represent a break of this 1 year long uptrend that we've been in. And so that would be, I think, a fairly significant development. So these are all levels that we're watching. We're looking at the options market to see how these levels are growing and to see if these are targets that are growing in probability. So for now, our first targets are in the 540 to 550 range. We're eyeing the 535 as a potential target if that trend breaks. And it's still too early to say, that there is going to be a break in this trend. I mean, that would be a significant development if that were to happen. Gamma exposure can't tell us if that's going to happen or not. But what it can tell us is the probability for a tag. Like I said, the most likely scenario in the coming days is a tag of this kind of 540 to 550 zone, which would be the bottom range in this channel. That is probably the highest probability right now. We're in a negative gamma environment. And so that is the most likely scenario would be just coming right into this bottom of this channel. And, from that point, we would probably be playing various option strategies that would give us exposure both to the upside or the downside from that point, right? So this would be things like, long iron condors, long straddles, things that will benefit if the market moves significantly either up or down. Those are the kind of strategies that we often will put on at those crucial turning points in the market. So that is kind of our base case scenario for now, but we're also looking at a few sectors in the market which are actually seeing a lot of investment flow coming into them the last few days during the sell-off. So here we're just looking at trading views, sectors and industries, a scanner list. And if we come over here to the performance tab, we can actually filter by performance over the past week and just sort that. And let's see, what is the best and worst performing. If you've been following the market closely over the last week, you know that tech has just been getting crushed. The electronic technology and technology services sectors are down 6.3 and 3.8% respectively just in the last week. So a pretty significant sector rotation going on. Obviously, small caps have been outperforming over the last week. So big rotation going on. If we come down here to the other end of the spectrum, healthcare has been doing really well, up 7.5% in the last week. Another area which really hasn't been discussed that much over the past week and past month in general has been the finance sector. Names like JP Morgan and Goldman Sachs, I mean, up over 8% in the last month, up over 4% in the last week. These are some sectors we've got our eye on. Also, industrials as well, up 6%, up 3.9% respectively. So with that being said, let's just look at a couple of names that have been doing well and where the rotation seems to be coming in. Goldman Sachs is one that comes to mind, has had a huge uptrend over the last month, really coming from the mid 400s all the way up to the 500 level, even overshot our dealer cluster zone here at nearly tagging 510. The last day or so has seen a pretty significant retracement because it's just had such a monster move. But when I look at the gamma exposure data, we've got the largest concentration at the 500 strike. We also have today big volume coming in at 500, more at 505, 510. There's really just a lot of volume coming in at these positive gamma exposure levels. And so I think anywhere from the 490, here you see the large gamma exposure concentration up to 500. This is just showing like we've probably hit a floor. It's right here coming into this trend line here. This is a high probability play for some sort of bounce. We're going to be looking at this, of course, in our Discord community, probably putting on either a credit spread or maybe some sort of double diagonal play to take advantage of these levels here, the 490 to 500 level. Even if the market continues selling off, we expect the finance sector to continue doing well.
We'll talk about GLD. Let's take a quick look at this. Man, it's been on quite the move this year, quite the run. And it looked like it was flagging after this huge move. And now it looks like it's breaking out of that flag. We see the Keltners all turning up. It might be a little bit stretched on a daily basis here, but let's go and take a look at the gamma picture because the chart only tells part of the story. If we look at our gamma dashboard, we have the GEX intensity gauge. This is a very strong sign, almost extreme. And if it becomes extreme, that can become a contrarian signal, but it still has a little bit of room. And we see this really big gamma cluster at the 230 strike. And if you go and look at sort of what that represents, that would represent GLD entering this dealer cluster zone where it might reverse at that point. But that's another basically $3 from here. And we have volume at 230. We have the gamma cluster at 230. So we think there's pretty good odds that this can make that move to that level.
By the way, if you guys are interested in joining our Discord community, I'll put a link in the description below. We've got a lot of great traders sharing information. It's a really great community, one of the best communities out there. Also, if you're interested in taking advantage of our gamma exposure dashboard and some of the other tools and analysis that we have, come on over to geeksoffinance.com. We're continuing to build out our dashboard. We also have our Geek University course, which is a 5-hour option strategy course focused on volatility, gamma exposure, trading strategy, and introduction to options. That's included for all of our members for free. Anyways, thanks so much everybody for watching. We'll see you guys in the next video.